I want you to stop getting ripped off so you can finally get ahead financially, because so many Kiwis feel like they are getting ripped off by the banks. So that's what we're going to talk about in this video, because even though the banks release these emotional ads to make us feel good about them, Nicola Willis, the finance minister, has just asked for an inquiry into the banks because she wants us Kiwis to get a fair deal. Hey friends, welcome back to the channel. If you're new here, I'm Ed, an economist, and importantly for this video, I co-own a company that helps people get mortgages. So I've seen that some home buyers and property investors, they genuinely feel like the banks are ripping them off. So I wanted to find out why and what you should do about it. And what I found is that if you take out a $620,000 mortgage and buy the average priced house in New Zealand, where I'm from, over the next 30 years, you'll pay $886,000 back to the bank just in interest. That's right, you've effectively got to pay your mortgage off 2.4 times. The first is paying back the loan itself, and the other 1.4 times is paying the bank their interest. So you can understand why some Kiwis feel hard done by. It does feel like a raw deal. Now, the bank's not being underhanded here. When you take out a home loan, you agree to the interest rate. But as a home buyer or investor, you don't have a lot of alternative options. If you want to buy a house, you kind of have to get a mortgage. So the only way you can really get back at the bank and shrink this amount of interest is by paying back that mortgage as fast as possible. And that's why I recorded this video, to show you how to pay off your mortgage in 5 to 7 years. But the other place people feel ripped off is those interest rates, because you see the banks advertising their interest rates online, on TV, on billboards, on their websites, and you might look at it and think, okay, that seems like an okay rate. But no one tells you that you can negotiate these. So although the average bank is currently advertising a 1-year rate of about 7.13%, that's just the carded rate, that's just the advertised rate. My team at Opus Mortgages, we're negotiating this down by about 0.25% on average, and that's called the discounted or negotiated rate. Now, 0.25% doesn't sound like a lot, but on that 620K mortgage we just talked about, 0.25% saves you about $48 a fortnight, or just over $1,200 a year, which is more than the tax cuts we just got from the national government. But here's the real trouble. No one tells you what those negotiated rates are. The banks aren't going to advertise their discounted rates. They use them as a negotiating tool. But the issue is, it's really hard then to tell whether the rate the bank is offering you is actually a good rate. So you go to Westpac and ask them for a mortgage, they'll probably give you their negotiated rates. And you might look at it, think that that's a great rate, and say, well, that's lower than what all the other banks are advertising. But maybe you could get a lower rate if you switched banks and negotiated with a different one instead. And this actually happened to me just the other day. One of the banks called me up to offer me 6.99% for a 1-year rate. Again, on the face of it, looks good. Lower than the rates I can see online at the other banks. But I knew that this was a higher interest rate than I could get if I called up and switched to another bank. So I'm on the phone with the guy, told him the truth, confidently put down the phone, called up my mortgage broker to see if it was worth switching banks. Now, to be fair to the banks, there's a reason that they do this. At the moment, interest rates are really high. They don't want to bring them down only to have to put them back up again if the economy suddenly changes. So they're not malicious, they're not intending to do you wrong, but the impact on you of these secret interest rates is that you as the borrower can't tell if the interest rate the bank is offering you is actually a great rate. And if you like learning about property and money in this open and honest way, make sure you hit the subscribe button. I'm really trying to grow the channel to 20,000 subscribers. But it's not just the interest rates. Some investors feel like the banks rip them off in other ways too. We worked with a couple of Wellington-based investors, and this was a couple of years ago now. They'd just retired and had invested in property for years. So they'd worked with my team at Opus Partners to build up a portfolio of about 4 investment properties, because that's what we do. Now, all of these properties, they were quietly paying for themselves, and the rent covered all of the costs. So the couple looked at themselves and they said, well, how are we going to pay for our retirement? They decided to sell a property and spend the money that they had left after paying for the mortgage, and that left them with actually a couple of $100K in their bank account, which they'd spend over the next couple of years. Now, when they did that, what did the bank do? Well, some new rules had just come in, the Responsible Lending Code. That sounds great, but under these new rules, when the couple sold the property, the bank did what's called a credit assessment. Now, that basically just means that they rerun the numbers to see if you can still afford the mortgages you have. And that sounds good, but what the bank effectively said is, well, you guys have just quit your jobs, you're retired and are now on the Kiwi superannuation. You guys don't have much income anymore, so you can't afford all of the mortgages you've got under our test calculations. Now remember, the properties were paying for themselves. They had hundreds of thousands of dollars in the bank. They had money, but without asking, the bank took the couple's savings, they took their Kiwi savers, they took the money from the house sale, and they forced the couple to pay down debt without asking them. And for good measure, the bank cancelled their credit cards and charged them a couple of grand in break fees too. And all of this was just 3 days before Christmas. Ho bloody ho. Now, this couple felt ripped off, not because of the bank's interest rates, not because the banks charged them a lot in interest, but because of the bank's behaviour. And the moral of the story is that while the banks will put out advertising to make you feel all good inside, they're not your friend. They've got all of these rules put on top of them from their lawmakers, their compliance teams, their legal teams. And so the bank might be doing things by the book, but it can still feel unfair, which is why you want to use a split banking strategy. That's where you cheat on your bank and use a couple of them. Because the days of being mates with your bank manager and having a relationship with the bank where there's give and take, those days are mostly gone. And the last way banks can make us feel like we've been ripped off is that they actually have all of these ways that they can help us pay off our mortgages faster. But in my personal view, they're so tied up in legal and compliance that they can't tell you how to use them. So I called up the bank the other day to open a joint bank account with my partner, and they told me that the best way to do it was to go online and do it myself. Now that seemed like really bad customer service, so I mentioned this story to a friend of mine who actually works for a bank. And they told me that that probably happened because if they were to do it over the phone, they've got to go through a whole process to give you advice, and that all takes a lot of time. But if I go online and do it myself, the bank is then just following instructions, so there's less legal hoops to jump through. Now, the issue with this, for you as a homeowner, for you as an investor, is that you either need to figure it all out on your own and tell the bank whether to set up a revolving credit or an offset account and how much to offset, how big should the revolving credit be, or you've got to talk to a mortgage advisor to set the strategy and get the advice. And if you are looking for a good mortgage broker, you might like to check out my company, Opus Mortgages. And I actually feel sorry for the poor bankers out there because they're not trying to make you feel ripped off. The banks are filled with really well-intentioned people who are grappling with lawmakers trying to get them to do things a certain way, and the people they borrow money off to give you and me a loan, those people want the highest interest rate possible. That flows through then to the rate that you and I pay. And then there's the legal teams who don't want to accidentally put the company in a bad spot, and that leads to checkbox compliance. But the impact of all of that is that we as borrowers don't always get the best experience and feel ripped off.